Florian Esterer. He helps oversee $60 billion as senior portfolio manager at Swisscanto Asset Management. Florian, thank you so much for joining us. I know every time I speak to you, I really try and pin you down on whether you expect a default, and if so, when. But now it looks more and more likely. Do you think Greece will receive this second tranche of money?
Well, I think at this point, with the opposition party seeming to hinder any deal, it looks more likely that we're getting closer to the default. Although I think from the latest words from Juncker, it might be that Europe might step up to the plate and just take over the IMF part. But I think there's a lot of political discussions going on, so we'll have to just monitor it over the next several weeks.
So, Florian, in terms of the actual options, because we have the ECB board members practically every day saying they're against reprofiling, this would be a disaster. We had Mr. Binismagi saying that he would link this to a death penalty. What are the other options left? We talk about this Vienna Program. How feasible is that?
Well, I think one of the reasons why the ECB is so vehemently opposed to any restructuring is because they're the largest holder of Greek government debt. So for obvious reasons, they'd be against it because they'd be the first ones in the firing line. The other options, I think, are very difficult. I think the reprofiling is, as everybody in the market understands, just another way of restructuring. There's just a little legal tangles if CDS should get triggered or not, but that's all about it. And I think you can see the results in the price of Greek debts. I mean, while it's trading, around 50 cents on the dollar, I think a heavy restructuring has already been priced in here.
And what about this talk about this possible Vienna program? So basically forcing governments to hold the debt beyond their maturity. I mean, these seems feasible in occasions where the investors believe that's in their best interest, but this is not the case now, is it?
No, I don't think that's the case right now. I think politically there are a lot of things that can be done. I think there'll be heavy jurisdictional issues around. I think there have been laws written on it. So I have lots of questions around it, but at the end it's a political decisions these governments have to make, and I guess the outcome is up in the air still, unfortunately.
What does it mean for your portfolio management, Florian, and what does it mean specifically for your view on banks?
I think this is a very, very slow-moving crisis, right? So everybody who hasn't figured out that there might be difficulties in Greek by now should be immediately removed from their posts, I think. So as a result, most banks have removed most of the exposure to Greek government debt and cut it down to tolerable levels. There are a few exceptions where, for structural reasons, they aren't optional, like Dexia, the Greeks, the Cypriots, Commerzbank, and so forth. But most of the other banks have reduced most of their exposure. So the de facto hit should be manageable for most banks.
And so does it mean, Florian, that you would advise certain of your clients to actually buy into banks?
Well, I think the issue really isn't around the facts. But because of this whole political discussion we're having at this point in time, a lot of the trading in the banks seem to be driven around news flow and sentiment. And I think, which is very unfortunate, that until we have a political solution which seems feasible and which has a long-term impact, we'll have difficulties for the banks to get moving again.
All right, Florian, thank you so much. Florian Esterer there.